People often assume the secret to beating the stock market is having inside information, a finance degree, or a computer filled with complicated charts. Peter Lynch believed the opposite. He argued that one of the greatest investing advantages isn't found on Wall Street, it's found in your everyday life. The products you use, the stores you visit, and the businesses you genuinely understand could become the starting point for extraordinary investment ideas. That simple shift in perspective has helped countless everyday investors see opportunities long before the rest of the market caught on. Think about it for a moment. Imagine walking into a busy coffee shop that's always full, or noticing that everyone around you suddenly seems to be wearing the same brand of shoes. Most people see trends. Peter Lynch saw clues. But here's where many people misunderstand his famous advice to invest in what you know. He never meant you should buy a company's stock simply because you like its products. That observation is only the beginning. It's an invitation to investigate, not a reason to invest. Real investing starts with curiosity. Ask yourself, is this company making consistent profits? Are its earnings growing? Does it have too much debt? Is the stock reasonably priced, or has excitement already pushed it beyond its true value? Great businesses can still be terrible investments if you pay too much for them. That's a lesson every successful investor eventually learns. This is where psychology quietly shapes every investment decision. Fear convinces people to sell when prices fall. Greed whispers that a stock will keep rising forever. FOMO pushes investors to chase headlines instead of facts. Peter Lynch encouraged something much more powerful, independent thinking. While others reacted emotionally to market noise, he focused on understanding businesses and giving quality companies time to grow. Patience, not prediction, became his greatest advantage. One practical habit you can start today is keeping an investing journal. Whenever a company catches your attention, write down why. Then research its financial health, competitive strengths, and future opportunities before making any decision. Over time, you'll train yourself to think like an investor instead of reacting like a gambler. The goal isn't to predict tomorrow's stock price. It's to understand what you own and why you own it. The beauty of Peter Lynch's philosophy is that it reminds us investing isn't reserved for financial experts. It's about paying attention, asking better questions, and staying disciplined when emotions tempt you to do otherwise. The market will always be unpredictable, but your habits don't have to be. If this lesson changed the way you think about investing, consider subscribing for more famous investing lessons, and let me know in the comments, which investing principle has shaped your financial journey the most? Sometimes the greatest investment you'll ever make isn't in a stock, it's in the way you learn to think.